Are you ready to start investing but feeling overwhelmed by all the jargon, the ups and downs of the market, and the fear of making a mistake? What if I told you that most new investors jump in before understanding a few critical concepts, costing them years of growth and thousands of dollars? The truth is, successful investing isn't about secret stock picks or complex charts. It's about grasping fundamental principles that empower you to make smart, informed decisions and avoid the common traps that derail most beginners. In this video, I'm going to reveal 10 absolute must-know concepts you need to understand before you invest a single dollar. These aren't just tips. They are the foundational pillars of building lasting wealth. And trust me, the number one concept will transform your entire perspective on risk and reward. Before we unlock these essential investment truths, please take a quick second to hit that like button, subscribe to Finance Butler for more clear, actionable financial advice, and share this video with anyone who's thinking about investing. And, as always, I'd love to hear your thoughts, so leave a comment below and tell me, what's your biggest question about investing right now? 10. Understand what investing actually is. Most people confuse investing with speculating or gambling. They see stories of quick wins and think that's the norm. This misunderstanding leads to impulsive decisions and unrealistic expectations. Investing is putting your money into assets with the expectation of future growth over the long term. It's owning a piece of a company, lending money to a government or corporation, or owning real estate. Speculating is making short-term bets based on predictions, and gambling is risking money on an uncertain outcome with no underlying asset. If you don't understand this fundamental difference, you're likely to take on too much risk and lose money. Are you looking for quick returns, or are you prepared for long-term growth? 9. Why you need an emergency fund first. It's tempting to put every extra dollar into investments, especially when the market is doing well. But ignoring your emergency fund is one of the biggest mistakes beginners make. An emergency fund is 3 to 6 months of essential living expenses saved in an easily accessible, liquid account like a high-yield savings account. It's your financial safety net. Without it, any unexpected expense forces you to sell investments at potentially the worst time, locking in losses or going into high-interest debt. Do you have at least 3 to 6 months of living expenses saved before you start investing? 8. The power of compounding. This is often called the eighth wonder of the world for a reason, yet many don't truly grasp its exponential power, especially at a young age. Compounding is earning returns not only on your initial investment, but also on the accumulated interest or gains from previous periods. It's money making more money exponentially. The longer your money has to compound, the more significant the growth. Even small amounts invested consistently over decades can grow into fortunes. It's why starting early is so crucial. Are you actively leveraging the compounding power of time in your financial plan? 7. Risk and return go hand in hand. Everyone wants high returns, but few truly understand that higher potential returns almost always come with higher risk. If someone promises massive returns with no risk, run. Risk in investing refers to the potential for your investment to lose value. Different investments carry different levels of risk. Stocks are generally riskier than bonds, but offer higher long-term return potential. Understanding your own risk tolerance, how much market volatility and potential loss you're comfortable with, is crucial before you invest. It shapes your portfolio. How much risk are you truly comfortable taking with your money? Be honest with yourself. 6. Diversification is key. A common beginner mistake is putting all their money into one or two individual stocks they feel good about or heard a tip on. This is extremely risky. Diversification means spreading your investments across different assets, industries, and geographies. If one investment performs poorly, others can pick up the slack, minimizing the impact on your overall portfolio. The easiest way to diversify for beginners is through low-cost index funds or ETFs, which automatically invest you in hundreds or thousands of companies. Is your investment strategy spreading your money across many different areas or concentrating it in a few? 5. Time in the market beats timing the market. Many new investors try to predict when the market will go up or down, hoping to buy at the bottom and sell at the top. This is incredibly difficult, even for professionals. Time in the market means staying invested for the long haul through market ups and downs. Historical data shows that consistent, long-term investors generally outperform those who try to predict market movements. Panicking and selling during a downturn often locks in losses and causes you to miss the subsequent recovery. Are you trying to predict market movements, or are you committed to staying invested for the long term? 4. Understand fees. Every investment comes with fees, whether it's trading commissions, expense ratios on funds, or advisory fees. These might seem small, but they relentlessly chip away at your returns over decades. Even a 1% higher annual fee can cost you tens of thousands, or even hundreds of thousands of dollars over a 30-year investing horizon due to the power of compounding. Smart investors prioritize low-cost investments like broad market index funds and ETFs, and they actively seek out platforms with low or no trading fees. Do you know exactly what fees you're paying on your investments? 3. Emotions are your enemy. The market can be a roller coaster, and seeing your portfolio drop can trigger fear and panic, while rapid gains can trigger greed. Letting these emotions dictate your decisions is a guaranteed way to lose money. Emotional investors often buy high and sell low. Successful investing requires discipline, patience, and the ability to stick to your long-term plan, regardless of market noise. Develop a clear investment strategy and stick to it, even when your gut tells you otherwise. How often do market fluctuations make you feel anxious or tempted to make impulsive decisions? 2. Your investment goals dictate your strategy. Before you invest, you need a clear answer to why am I investing? Is it for retirement in 30 years, a down payment on a house in 5 years, or something else? Your time horizon and financial goals determine the appropriate level of risk and type of investments. Short-term goals typically require lower risk investments, while long-term goals can withstand more volatility for higher potential returns. Investing without a goal is like driving without a destination. You'll just wander. What are your clear, specific financial goals for investing? 1. You are your greatest asset. This is the most crucial concept. Before you even think about stocks or bonds, understand that your ability to earn, learn, and adapt is your most valuable asset. Investing in yourself through education, skill development, networking, and health directly impacts your income potential. A higher income means more money to save and invest, dramatically accelerating your wealth building. Protect this asset by staying healthy, continually learning, and cultivating a growth mindset. Are you investing in yourself as actively as you plan to invest in the market? Grasping these fundamental concepts before you dive into investing will save you from common pitfalls and set you on a clear path to financial success. If you only caught the end of this video, you missed crucial insights into the essential principles of compounding, diversification, and managing risk that every beginner must understand before they invest. Go back and watch from the beginning to truly equip yourself. If you're ready to apply these foundational truths and start your investing journey with confidence, check out my next video, linked right here, where I walk you through how to choose the right beginner-friendly investment platform and make your very first informed investment. Don't forget to like this video, share it with anyone who's eager to start investing the smart way, and subscribe to Finance Butler for more financial wisdom that builds real wealth. And tell me in the comments, which of these concepts resonated most with you today? Let's build your financial future on solid ground.